Joining us in the studio today is tax consultant Adrian Huston, who's going to give us some tips on tax. Thank you very much for joining us in the studio today. So when should someone begin thinking about their tax for when they're in their later life?
It depends which tax they're worrying about. If they're worrying about inheritance tax, which is the tax that's paid when you die, if you're worth a lot of money when you die, that's really something you need to think about from your late 40s, early 50s, because the best tax planning for that is done 7 years before you die. And so, since we don't know when we die, start planning early. If you're planning for retirement and you're getting close to retirement, then the last year it's important to make sure that you've got all your ducks lined up, that the revenue knows what your sources of income are. And when you start to get a pension, the way to tell them is to fill in a form called a P161, which tells the revenue your different pensions, whether you still have a wee job, whether you have savings, and then that way they can get your tax codes right, so hopefully there are no nasty surprises down the line.
Self-employed people, it's obviously quite different from when you're an employee. Is there any tips that you would provide someone that's maybe thinking about going self-employed or is currently self-employed?
Well, the most important thing if you start a new business as a self-employed person is that you have 3 months to tell the tax office. If you're later than that, they can fine you £100. So within 3 months, and I would suggest don't leave it 3 months, but within 3 months you must register as a self-employed person. You can do that by phoning the revenue. The phone lines are all available on their website. You can phone them, or you can fill in what they call a structured email, because they're not very keen on emails, but they have an email form you can fill in that gives them all your details and when you started your business. And then that will result in them issuing you with a special reference number for getting tax returns every year. And then from then on, while you remain self-employed, you'll have to declare your income each year. And not just your income from the business, but any income. Maybe the job you had before you set up business, or your bank interest, your dividends, things like that. It all goes in the form, which comes out to you every April.
And as a tax consultant yourself, what kind of problems have you seen occur often?
Well, the thing that's happening a lot recently is the revenue is generally not very good at buying IT equipment. But they've recently got some new computer systems in which have been pulling together information that previously was held in different places in the tax office computers. And so by pulling this all together, they're able to discover that people have been on the wrong tax codes. And so they add up the person's income according to their records, and then they send them either a bill or a tax refund. And those go out on a form called a P800, and those have hit the media recently because they're sometimes sending out hundreds of thousands of these to people who thought their tax was right because it was been deducted at source. But if you're on the wrong tax code, the wrong tax is being deducted at source. So I often find myself fixing that for people, or checking that the figures are right, or negotiating with the revenue that they pay the tax over a couple of years.
If you haven't declared something, what should you do? Is that something you should be concerned about?
It is, yes. In a previous life I was a tax inspector, so I used to be catching people who hadn't been declaring either any income or hadn't been declaring the full amount of their income. So yes, that's a very important thing, because these days the revenue has many more sources of intelligence and information than they used to. So there's much more chance that you will eventually get caught. And so if there's something you haven't been paying the right tax on, if you put your hand up and say to the taxman, I think of something to tell you about, you will get a much easier deal and an easier run than if they come to you and say, we think you haven't been paying the right tax. So that's a very important thing to do. Just bite the bullet and tell the revenue, and most people would choose to do that having taken some professional advice first, so that they maybe pay someone else to act as a buffer between them and the taxman. But the main thing is to tell them. And equally, if it's a source of income that you haven't declared, well, either stop the source of income or declare it, because the years that go on, the more chance that you will get caught. And then there can be tax, interest, penalties, And in the very serious cases only, there's always the threat of prosecution, but that tends to be aggravated sort of benefit fraud and things like that.
Just to move on to tax credits, are there a lot of people missing out on that opportunity to access them?
I think there probably are, and to be quite honest, I would say the people who are missing out on them are actually pensioners, because there's the pension tax credit, which is there so that pensioners have a sort of minimum level of income, and the credit can top up that income if they're not earning enough. There are lots of tax credits for working people, for families, for people with children, with childcare, and I think a lot of those, there's a lot of talk about them, so a lot of people are claiming them. Whereas with the pensioners, I think a lot of people, through a slightly misplaced sense of pride, maybe don't claim them. What they need to remember is they paid taxes all their years, and if the government decides to help pensioners in their later years, that help should be taken up.
Thank you very much for joining us in the studio today.
Thank you.